Woke up late, charts on fire, red and green like a funeral pyre. Discord screen and LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump, I won't forget. Buy high, die huddling. The gen brain dopamine's controlling. Ride the whale, get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shitty clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I'll play to win. Even if I lose it all again. Buy high, die huddling. Gas fees burn, but I keep rolling. FOMO's gone, greed's the king. This crypto dream's a punk rock thing. Time in hands with the crack in the glass. Risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape again and again. Buy high, die huddling. Gas fees burn, but I keep rolling. If I crash, at least I tried. In this wild west of blockchain rights. I'll be trading till the lights go out. Charts are noise, but I live for the sound. One candle spike, and I'm back in town. Crypto's a fight, and I'm 10 toes down. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. But I'll reload, I play to win. Even if I lose it all again. Woke up late, charts on fire, red and green like a funeral pyre. Discord screen and LFG, but my portfolio's haunting me. Spiked my coffee with regret.
What's up, guys? How is it going? How are you feeling about this drop so far? Okay, we have the chat. We got Mikey. First one here, Mikey. Oh boy. Coma, you got some competition. Noah, how you doing, man? Sterling. How did I beat Coma? Mazen, how you doing? We got Joe, Juan, and we got Freebreaker. How you guys doing? Oh yeah. We got a little bit to go over because we're in a big moment for Bitcoin, and it doesn't mean like this could be the bottom. Like it has to be, or else we're gonna drop much further. So I just want to go over really quick the macro conditions so you can kind of prepare for the worst case scenario kind of mindset, because this green box zone has started to be, it was a much bigger zone of interest, like a large like daily demand zone from this break of structure out of this 250-day value area, right? We used it as support. Right, we bounced off of this volume node, which is a part of our core demand zone, and we just bounced off of the volume shelf of that daily demand. Of that daily volume shelf level from this 250-day range. So this is a key area of interest. It's our last little guardian before falling into this previous valley or volume gap right here, that pretty much just, whenever we lose this from the previous valley area information that we got here, we kind of teleport down to the point of control every time we lose it, right? We use it as resistance and support. And if we lose it, we come down and we fall right down to 63,170. And that's kind of, since we mitigated this demand, it's kind of our last little area of support before an event like that happens again. And based on on-chain data, we're already kind of capitulating. So that's telling us that there's a large majority of holders are now holding at a loss. And last time we had events like this was COVID, the COVID crash. And when Bitcoin dropped from the FTX crash, and we kind of create this like liquidation cascade event, and all the way down to around like 16K. So we are meeting like bear market bottom conditions, but we still have some room to bleed if we were to use this valley area high as a form of resistance. So if we were to zoom in on like lower time frames, and of course we could see this happen in higher time frames as well, like the daily. We kind of got that, we're at our bounce zone now, and if we don't get any structural evidence of support here, and we instead use like either this previous low here as a form of resistance in confluence with the 250-day valley area high, and then get a lower low, we'll fall into that valley, and we'll race right down to that point of control we were just talking about, which I should have labeled now that we're starting to get acceptance into this valley area. So we'll get this horizontal ray. We'll mark it right off this level here, so we can be a little bit more mindful of it when we're zoomed in on the right hand side. So previous POC, 250 plus day. And if we lose that point of control, then we could fall to as low as 59,163, where the valley area low is. And we saw deviations of that valley area that brought us down to as low as 50,000. So if we have the same kind of behavior that we did when we were ranging here for like 250 days, then we could expect like rotations down to the valley area low, and then hit like that previous area of demand that we definitely fully mitigated during the August 2024 crash. But yeah, let me just get this all labeled here for you guys. It's bizarre. So yeah, looking at on-chain data, we're kind of past most of the stage where we expect our omissions rule strategy to be met for calling the absolute bottoms. Like I'm not sure how long some of you guys have been following me for, but I had a video where I was basically doing like a 7-hour countdown for the bottom. And I'm hoping for that same kind of predictability by combining like on-chain data with daily structure. Because the 7-hour countdown that I had in that video, I think it was back in, what year was that? Back in like 2023, I guess, right? It was based on the daily candle closing above a key level to help drive us into a bull market, and meeting all the on-chain rules for defining the bottom. And we've met a massive majority of the on-chain rules for defining the bottom, but it's a little loose. So you have to depend on market structure in combination with that, or else you could see further legs down like we're seeing right now. Going into like the supply and a profit and loss, you can see how much we can deviate down to as like a low as like the supply being at like 38% of supply being held at a profit, right? This green line here, we talk about this all the time. This is a zone where you prepare for the big, massive reversal. And the last price tag update we have from Glassnode was when Bitcoin was at 78K. It was at like 56, 55%. And at our current price tag, we don't have that updated yet on here, but I could imagine that we're pretty much at around 50% now in this green zone based on our current price tag. So we're now starting to meet the on-chain rules for calling the absolute bottom, but we still have to prepare for further potential deviations down. And that could come from that confluence of acceptance into this value area telling us that we could go as low as 59K, 63K. So this is a huge, important moment, like not to be making like apish kind of decisions on your portfolio, because like this could be the moment that we reverse, break. Like right now, the closest thing we have to like healthful structure is on like the 15-minute time frame. Right here, we were watching this morning in hopes that we'd get above, like since we were bouncing off of the 250-day value area high, we were hoping for like a 5-minute bullish change of character. Instead, we had kind of the opposite. We had an SFP telling us that we were coming down to at least this low. So we had to sit and wait. And then we end up getting the change of character when the strong high flipped to the strong low, and then we broke that strong low from the SFP scenario. But yeah, we were definitely hopeful that we would break above this level, break this downtrending momentum, and get above the VWAP to help guide us into a long to start taking the descending regression trend liquidity and maybe retest the April 7th low that we lost from, back in April 7th when we had this falling wedge posture that helped us to find this reversal back up to what's now the all-time highs. So yeah, things are breaking. We got to be like really cautious on our decisions here, guys. So the right now, based on structure, this is still our main level that we need to break before I could think bullish thoughts again, that maybe this could be the bottom. Like our volume node that we're talking about from the 250-day value area, this is the volume shelf right here. Like we're at it. This is all we've got left. And now that we're below the 250-day value area, this has given it the opportunity to act as a form of resistance. And if we get that break of structure low, that is a form of acceptance into a value area. And acceptance into a value area warns you of a rotation down to the opposite side of the value area. So the same way we use the clairvoyant strategy to guide us into trades, this would be a macro kind of setup for a short, for a continuation down to target the value area at 59K while being super cautious at this point of control. This is a relatively strong point of control. This is like a 16% range. Yeah, 16% range. So we'll see what happens, guys, because like this is the pivotal moment. And if you're an altcoin holder, man, I'm feeling for you right now because they're bleeding hardcore. And Bitcoin's kind of the dictator of what happens to a lot of alts because of the pairing liquidity effect that happens when Bitcoin drops. So when Bitcoin drops, everything kind of drops along with it. So if we get a recovery here, it could be the spark to some alts also starting to recover as well. Do I watch the 200-week EMA? The 200-week EMA, I don't watch it as cautiously as most people do. I've mostly watched how we interact with the daily because of how it normally is has more interference with my range bound strategy. It kind of really messes up my strategy rules when we kind of squeeze between them. Like during this event, this was really annoying for me. I remember it being a pain in the butt. So when we left and we got that breakout, I was super happy. But we can add the 200-week on here so we can see it if you would like. We've got to add it over here. Go to indicators, type in EMA, exponential moving average. It defaults to the 9. So you change the length to 200 and you change your time frame chart to the week. And we're breaking below that now. So it's pretty much flush with the previous value area high. So the information that we're getting from the value area high, it's going to help us guide us into knowing when we're going to break above this. I'll make it white so everyone can see. But this is the EMA that, who brought it up? I'm sorry. Phenoment. All right, cool. But yeah, so if we get above the value area high here, we have that confluence of us getting above that 200 week EMA. So roughly where this break of structure, the boss line is here. So getting above that will give you that confluence. Still should wait for structural break. Like right now, our 30-minute strong high, our 15-minute strong high is here. So breaking above that would flip us bullish, unless we have a pullback and take a new low, and then we have a different key level. But I would much rather be back above the 250-day value high, being above the VWAP, being above. Like, we'll have so much confluence, guys, if we break back above 70,800. Like, just to repeat, the 15-minute orb, the VWAP, downtrend momentum, being back above the 250-day value high, and now we know we'd also be above the 200-week EMA too. So lots of confluence on that break. So we're crossing our fingers for that. And if we don't get it, and we instead use this as resistance and come down and get a lower low, then I'm expecting a rotation down to 63K at least. And it's pretty harsh. But yeah, a lot of businesses are capitulating right now. So we expect, this is also a time, guys, of extreme caution of picking the right exchanges, because sometimes when we capitulate, so does the exchanges, and some disappear after events like this. So make sure you pick exchanges with a large amount of reserves and backing reserves, not just one-to-one, right? Some of them will flex their one-to-one ratio, but if they have an ADL issue, they can go bankrupt. So you have to make sure you pick your exchanges really closely. The ones I would recommend, obviously it all depends on where you are, but there's BitNex, there's BTCC is great, Blowfin's great, Bybit's great, BitGet's good, BingX is good. I am going to be cautious. I recommend caution around MEXC, because their reserves are really volatile, and we just looked at them this morning, and we saw that they kind of like pulled a lot into stable coins, and they don't have very much. They have a good ratio, but these guys, they lose 10 to 20% of their reserves just from dropping their promotions. So they always have these like promotional deals to try to keep retail in. Just be super cautious with and just be really mindful of the reserves, the volatility of the reserves between exchanges. You could check them on chain. Like the first thing you'd go to is like something like CoinMarketCap, right? They might not have them listed here, but you can then open their wallets and look at them on like Etherscan, and you can watch it like a chart and see how quickly people withdraw. And if you see a 10% or 20%, 10% a warning, 20% is like get out, right? So if you see like a 20% drop in reserves, take your funds out until the dust settles, because you don't want to be in a scenario where your funds get locked and they do withdrawal locks, and then they end up losing their funds, and then you become a victim of like another FTX event, right? Just be mindful of all that stuff, okay? Some people, definitely are. KuCoin. KuCoin for alts are really shady, but their reserves in terms of like Bitcoin and stables are okay. Their alt reserves are just generally bad, and because they don't ask for enough funds. So just be careful when it comes to like trading them in general, because you might get some weird slippage events and have your stop loss dodged. But yeah, I wouldn't be like, I'm not trying to scare you guys. I just want you to be super cautious of like how where your funds are and stuff like that, because sometimes events like this just cause certain exchanges and dexes to disappear. Dexes are really transparent. You can really watch what's going on in the background, and most of the time you're fine because you're using it on most of your funds should still be in your wallet, and you're not having them hosted right on the DEX itself. But this is where opportunities happen too, right? So if you're looking for a buy opportunity, once Bitcoin confirms its reversal, and right now, like this is a good key level to watch. It might not be the bottom, but it will definitely cause a bullish reaction if we close above this. But this is the time to prepare for like a great time to like for accumulation, right? So if you're not in on anything, this is a great moment to prepare to accumulate, right? But you definitely want to make sure you wait for that confirmation and not jump the gun too soon, because we can still go down lower. Like we said, as low as like 59K. Ethereum, I looked at Ethereum today. We lost a really important key level and used it as a form of resistance. So it's kind of dropping down fairly hard. Its key level that I'm watching is based on a daily order block and Fibonacci confluence. We kind of breached past our golden pocket and 786, but we have our 886 kind of flush with this daily order block and demand zone right here. And that demand zone starts at like 1,845. So when we get there, I would prepare for a kind of reversal scenario as well. But then we'd have to watch the key level that I just mentioned that we use as resistance at 2,100. We use it historically as a very strong level of support. It's close to a psychological level, like $2,000 even is like a psychological level that we tend to watch. People like typing their round numbers when they're working on their exit plans or their entry plans. So a lot of accumulation occurred here, and a lot of people exit around there too as well. So yeah, big level to watch for Ethereum. To prepare for a reversal structure is down here if we come down a little bit lower. Zooming in on the lower time frames, like the 15-minute, our current key level is kind of similar to the same kind of posture as Bitcoin. It's like right here. We were hopeful of a break of this level here, but we never really got. Yeah, we definitely didn't get it. We had this regression trend, descending regression trend, and we lost that buyer's momentum, and then we used the key level as a form of resistance. So same kind of story as Bitcoin. Like just based on our current posture, we'll definitely have a new structure soon to kind of define new key levels. But based on our current posture, like if we break above, 2,103.4, we'd get above the VWAP. We'd mitigate this 15-minute opposing bearish order block, and we get above this downtrending momentum and get above that psychological key level. And we can see if Bitcoin would likely have to break above here in order for Ethereum to even get close to that. From the pairing liquidity effect that would help draw it up. But if we don't get up there, this is our next little spot of interest. We'll compare for potential support. And if Bitcoin holds where we currently are, Bitcoin's relative positioning, let's say we get something like this and we return back up, Ethereum could be carried prior to us meeting that area of interest. Let's see what we've got in the chat here. Blue Star Effect. You have a big bag of XRP. I've hodled a while with an average of $1.20, trying to decide if to dump it or wait it out. Was up 20K in profits and now covering around, oh man. So he lost some opportunity and gains there. Well, Bitcoin's gonna be a big dictator, man. So there is a lot of pairing liquidity between XRP, Ethereum, and Bitcoin. So they kind of move closely together. So if we see resistance here and we lose this volume node, we might not even have to reach that. Just losing this volume node in general, we can get that fast-paced move down. And you might be able to sell your XRP and then rebuy with the same amount of funds to accumulate more XRP, right? So this could be an accumulation opportunity as well. Then have a stop loss for a rebuy at like a key level that, if broken, can induce a move back up. Now, if we can look at XRP's chart, you can see what kind of positioning it's in right now. To understand it lost a key level as well. Yeah, it's $1.28. It's nuts. Fully mitigated this demand zone. Similar kind of story to Bitcoin, right? we're at previous market cap all-time highs. And we're testing these previous highs from around December 2021. Let's mark some key levels we have to watch out for. Because if we can look at, obviously, its behavior, this is an aggressive move up. And to lose this demand zone, we could press the undo button down to like $1. Would be our next strong key level, like at 95 cents. So we could mark this with the horizontal ray. Mark it as a local support for now. So yeah, 94.799. We have this little demand right here. Our last little dude. For the 6 hour. And then we mitigated this. Green box zone this area here. It's kind of its last little shield of support. And then we can look at structure. Yeah. Right around the VWAP. That's where we currently have our change character level for 30-minute and 15. So we could get a kind of, hopefully, like something like a V-shape kind of recovery here. Come up, maybe test the VWAP, pull back, and gives that inverse head and shoulders, and then gives that change of character that we need. And with the, we'll have the break of downtrending, well, evolving momentum at that point for XRP. Yeah. This is, yeah, definitely a good key level to watch. 138.488. I would say hold if we break above that. If we get acceptance into this demand zone and we use this demand high as a form of resistance, I'd be cautious. Yeah. By then we'd have Bitcoin kind of dictating a drop. So you can use Bitcoin as your decision maker on that, right? If we use this value area high as a resistance and get that lower low, XRP should drop along with it. And I think $1 is a strong psychological level. We have this little demand here. It's a big demand zone. So you don't want to like go through this and realize you can lose 14% before you have an answer whether or not it can go down much lower. You know, Bitcoin will give you the answer sooner than XRP will in terms of structure. Just an XRP will very likely not hold this if Bitcoin drops because of that pairing liquidity effect. Any thoughts on Solana? Solana got butchered too. Last time I looked at it was yesterday. We were watching a key level, hoping for a bounce here. What key level do we want to see? It was this one here. Pull back, lower low, change of character here during this moment. Never got the change of character. Instead, we got like this descending triangle kind of posture, then used it as a form of resistance, losing the previous point of control at $90.50 in confluence with that structure. And we just mitigated this demand that we had from, let's go the 4 hour daily. Oh, it was a daily order block. So it's actually close to a really strong level of support at $80.59. With this range bound price action where we had this leg down from the previous cycle. Yeah, previous cycle valley area. We ranged here for 107 days. So this is a pretty critical level as well. We have a daily order block below us at 7604. We can delete this, zoom in. So I'll be prepared for reversal structure at $80.59. Solana does sometimes have these relative strength moments where when like Bitcoin drops, Solana drops slower. So I'm hoping that we get that kind of scenario for Solana. I'm not a huge like Solana holder, but like I know a lot of people that are, so I kind of feel for them. I really want them to like see this like hold off on this valley area. And if we do deviate a little bit low, like below it, we did see that daily order block that could hold us up around like 76.25. We have a key level to watch here for a wick level low that we could sweep to give us a bullish reaction at $79 even. So we can mark at $79, and then the green box, this daily order block at 76.19 area. Zooming in, we could see that it came from like this doji and then impulse engulfing candle from back in like December 19th, 2023. And the order blocks are a warning sign of residual orders, and a lot of time has passed since then. So we'd have to, be mindful of the fact that that amount of time has passed and the residual orders might not be there anymore. But when people see an order block, they enact off of it, and that in itself sometimes creates like a self-fulfilling prophecy and causes reversal. So take it with a grain of salt. Make sure you wait for reversal structure first before assuming support off of something like that. But yeah, big key level starts at $80.59. If we do have continuations, Bitcoin's going to let us know very soon. And if we do get down here, then we'll be watching, 80.59, then 79 for a potential sweep bounce. And then if we deviate lower, this is a good key level to watch for potential reversal as well at 76.27. But this is the main guy that we want to hold between like here and here. So we can prepare for us to, stick into this range again for maybe another month or so. Because our key level right now is here. And the confluence of breaking $91.43 would be the mitigation of similar to XRP, actually. Break of downtrend momentum, getting above the VWAP, getting above the previous POC, mitigating that 15-minute order block, flipping bullish on multiple time frames, and then seeing us run up to try to take this regression trend liquidity maybe as high as 105 again. But that's right now, that's a big ask. We got the barrier of the valley area low at around $100. Let's see what happens. But yeah, this is our current key level. If I were to draw pathing on the behavior that I expect, probably hit our head around here, pull back. And this is like our main little boss along the way. I've been kind of hawkish watching this today. Why are we free falling like this? We're starting to get some liquidation events going on right now. We talked a lot about it already. With the we're not done if we use this valley area as resistance and we close below this low. Closing below here could fall much further. There's not very much interest between here and here. So think of it like a good visualization tool is to just understand how the order books work. If you see, you'd see a lot of buy orders probably around here and smaller amount of orders here. So it takes less amount of funds to drive the price down until like this moment. Like zooming out to the daily again, kind of, so you can see like a better visualization of that through the fixed range volume profile. Here's our valley. Our volume shelf starts at around 64K, and we're losing this volume shelf right now, hopefully holding it at our current price tag around 66K. Right? Well, so if there's no interest in this area, the orders usually reflect similar behavior of a previous value area. So most of the buyers will be waiting there. So once people sell, the price actually moves quickly, like it did through here. So there's our last little guy, our last little guardian for Bitcoin right now before we could get trapped in another 250-day range and get that bear market bottom vibes, basically. I wouldn't mind being stuck in a range for like another 200 days or so. That's one thing we spoke about during this morning's trade hunting call, is that if we get trapped in this again, some of our biggest gains in the community's history came from this range. Like, this is a big money maker right here. Really predictable kind of behavior. So we can use this data to assist us in future trades if we fail to get acceptance back above this value area high. It's a big make it or break it moment right now. Right now, we're kind of forming a potential ascending double bottom. We'll see. The sell shadow wicks are pretty harsh, but if we break above this level here on the 5-minute, we have an internal bullish change of character. It's internal to this high here and this low here. So anything that happens between this on the 5-minute is all internal until we break this high or break this low. Sorry, I got carried away. Ondo Pancho, how you doing, man? Haven't seen you in a while. Let me try to catch up to the chat. See if I'm missing anything important here. Okay. You're panicking, to be honest. Yeah, that kind of psychology is obviously granted with what's going on right now, man. If you're thinking about selling your bags, just wait for confirmations first. Like there's opportunities to like sell for a rebuy, and then you would accumulate more. Do you know if money on DEXs are safe? DEXs are really transparent, easy to monitor. So you go to a DEX and you can monitor it per pair, right? So if you see a pair with like let's say $1 million in it, right? And that pair could be between, usually it's wrapped Bitcoin, PTCW, right? And another asset, let's say something like, I don't know, USDT. So with that DEX, if it has $1 million on it, it kind of tells you that's how much money's in the bank, right? And how much influence orders have over that pair. So if you, for example, only had like $10,000 in a pair, then you putting $1,000 into a trade would manipulate the price by 10%. It's not based on the market cap of the asset on a DEX. It's based on the valuation of that liquidity pair. So as you watch the liquidity pair go down in value, then you should be more hesitant on using that pair. The good thing about a majority of DEXs is it allows you to connect right from your wallet, and the funds should stay in your wallet. But when you are done trading on it, disconnect your wallet entirely, in case there's sometimes when you have cascade events, it causes security issues and makes it easier for DEXs to be hacked. So always disconnect your wallets, whether the market conditions are good or bad. Just in general, it's a good habit to stay safe in a space. But DEXs will be a little bit more transparent on what occurs in the background because they kind of have to. It's all on chain. Whereas centralized exchanges, they don't have to show their Merkle root, and they don't have to update their Merkle root. So you just got to be, unless they have given you like their actual addresses for you to track. Yeah, centralized exchanges are actually the ones that are a little bit more higher risk. We have pick exchanges that have a large amount of reserves. Everyone in the description down below, this is not like an ad or anything like that, but everyone I have in the link down below is like a safe one that I audit for the community every day. Almost every exchange that starts with a B, I look at least once a day or every other day. Like Blowfin, Bybit, BitConnects, all of them, they're safe. BingX, BitGet, they're safe right now. I'm worried about the survival of MEXC though. On-chain works for retail cycles. ETFs broke that. ETFs did not break that data. ETFs evolved that data. So when it comes to the honesty of the supply, you can't lie about that. The ETFs don't cloud that information. Well, some indicators did break on chain. For example, the addresses in Profit are no longer as reliable as it used to be. So if you look at percent addresses in a Profit, that on-chain data, for example, can be manipulated simply by a transfer. That's actually something we spoke about today during the call, because the only thing that needs to occur to make an address seem profitable, let's say, for example, you bought at the absolute top, right? That address would be being held at a loss. If you then transfer those funds into a new wallet at today's price, and then we start to go up, that new address is now in a profit. So it's showing us right now that 74% of the addresses are in a profit from the price tag of 78K. But we now know with ETF providers like BlackRock, they have insurance policies that can only go as far as so much money, right? So they have to diversify, not only for insurance, but also for additional security reasons. They have to diversify their funds into multiple wallets. So it kind of tricks some on-chain metrics into thinking that individual is holding at a profit, but it's just that one address itself. So you could be, one person and have like 15 wallets, and your on-chain metrics will show like some of them being held at a profit, some being held at a loss, even though the buy average is the exact same. So I get that ETFs could break some stuff, but there's some tools that they can't break. This one being one that it makes things a little less honest, right? So you can't depend on addresses in a profit and loss anymore, because back in like pre-COVID, it was mostly retail driven, and that you could use this as a really reliable tool, right? Whenever we saw like addresses being held at a loss below like 50%, like pre-COVID, it was pretty great. And even like in like 2023, we kind of tapped this area and helped define a bottom. But now we have more institutional involvement. This tool is not reliable anymore in terms of percentage of address and profit and loss. And there's probably some out there, other tools as well, that are not as reliable, but all the ones that I personally use, they're all still super reliable. It's a really good point though. Let's catch up here. Chow took the short at 70K. Good job, man. There was let's see, 70K. So you got in on the change of character around like 69, 70K here. Or loss of the V of the orb. There's some see some like opportunities here, like the SFP that we occurred on the 5-minute. with the VWAP retest, downtrend momentum retest. It would be targeting this low first, most recent profit pullback. But overall, some technical targets, the less conservative targets would be the strong low at that time. So yeah, I see some up to that. Yeah, this was the break into the value area here. I didn't take the short because of the fact that we're still in a demand zone that I'm kind of waiting to either A, be fully mitigated, which it is now during that moment here. We're going to see if we get the internal bullish break during this moment, getting this double bottom, and hopefully get acceptance back inside this, back above this value area high, and just get out of here, because the more we're down here, the scarier it gets, guys. We do not want to be down here for too long. As soon as we start seeing a daily candle close in here and start seeing the opportunity for like larger time frame structure to use this as resistance, it gets pretty doom and gloomy. And there was a chalk at the 5 minute. You can't get the audio, Nathan. Check. Yeah, I'm looking at my system and showing the audio is coming through, man. So it might be on your side, bro. I'm sorry. Is there a free platform like Glassnode? Yes, chain exposed, but there's some downsides to it. Chain exposed, you can see the rendering date on the top left, and the data that you receive is late. So yes, it's free, but it's slow to update. And during really important moments like this, it's a big pain in the butt. But it has a lot of the metrics used from Glassnode. They're using Glassnode's API to provide this. So yeah, you can use this to kind of help guide you. I saw some one government sold that actually helped assist with this leg down, by the way. Bhutan sold. Here, looking at that this morning too. But yeah, chain exposed is great, but it's just, yeah. It used to update a lot more frequently, but like once every 7 days or so, and I used to do weekly reports. But then once we saw a moment where it took like 60 days to update, I'm like, nah, not when we're this close to like coming down this low. I had to pay for Glassnode so I can keep you guys informed. But you guys don't have to pay for it. You can always just shoot me a message in the Discord and I'll get you any information you might need. And I'll keep you guys up to date too. I'm preparing for a potential inverse perpetual trade if we get all of our conditions. I would love to be able to do the same thing I did last time, like give you guys like a countdown of when the bottom is in. Because like last time it was like we had a 7-hour countdown on like a YouTube live, saying like down here we were front running this ascending double bottom break from this internal double bottom. So I got on at 16.9K, and we ran it up to we didn't expect it to be this volatile. Definitely not. When we broke this, we felt a lot better. And then we broke this macro downtrend momentum, even better. And then we had the bullish golden cross. And it was off to the races from there. And it's still my biggest trade in my career. I didn't close my trade until we hit the golden pocket. And I'm still holding the Bitcoin returns from that. Like the Bitcoin returns were returning 10 to 40. And I'm still holding that because I was using on-chain rules to try to dictate the top, and some of the on-chain metrics kind of evolved, so I didn't sell my Bitcoin here. But I can still use that Bitcoin as a tool for another inverse perpetual trade to accumulate more for the move back up. And for those of you who don't know what an inverse perpetual trade is when you use your Bitcoin as collateral to earn more Bitcoin. So you don't have to sell your Bitcoin to accumulate more. Because there's two different strategies when it comes to accumulation. It's selling at resistance with your spot bags and then rebuying at key levels of support. When you confirm drops, you sell. When you confirm reversals, you rebuy. And then you just accumulate for free that way, assuming you don't make too many mistakes. It's quote unquote free. But inverse perpetual is another way of doing it without selling your assets. You're just like basically just using it as collateral. On exchanges now, it's been rebranded to Coin Margin. And I'd love to be able to guide everyone into something like that again. Like life-changing kind of stuff. Let's see. Could be long here. Yeah, we just got like starting to get the internal break. Trying to see if whether or not we get an SFP. Like similar to what we saw here, right, guys? So we have to wait for the confirmation, right? Because here was really important. We almost got that change of character. We instead closed an SFP and gave us this measurable target, and then we got this bearish change of character here. So here, it's sometimes worth giving up some of your gains for the extra sense of security. Then we have to watch this like a hawk. We were just talking about the 200-week EMA being here too. Our value area highs here. So we got a lot of opposing confluences here. I'm dead set on waiting until we get all these confluences on our back. I'm not in any rush to jump into a long right now. So if we get something like this and then break, I will be going hardcore long. Maybe an inducement of liquidity here. Then we break up. We hit our head here. Get something that gets descending. Or evolve momentum and then break. Get acceptance of the orb during that moment. But that would be a front run to the structural break that we want to have occur. So this is what I'm worried about happening now. And I know I'm kind of being overly cautious. But I don't want to base a decision right now on internal structure. It would be a great front run if it occurred though. I do gotta go, guys. It is Thursday. I forgot it's kickboxing day. So I gotta run. My wife and I are gonna go kickboxing, come back. Hopefully Bitcoin will be in the right positioning that we want for a potential long up here. Look out in the Discord for some signals for me if that occurs, because you know I'll be aping into that one. So just, yeah, please trade safe, guys. Again, be very, very cautious of this event. Like if we come up here, we use this as a resistance and then get a lower low, we could fall down to this point control at 63K. And that will drag alts even further down, okay? Just be super cautious. The relative positioning of alts right now suggests that we could go down lower, right? We're talking about Solana being in the mid area of its previous value area. So we can go down to $80.59. XRP, kind of a really important moment right now. So hopefully we just stick to consolidation. Ethereum, 1,850 is a strong key level. We got a daily order block there. And it's our 886 in the Fibonacci pull from an extreme low to extreme high. So trade safe, guys. But this is what we want. This is what we need. It's right here. 70,876. All right, guys. You have a great day. Thank you so much for watching. Thank you so much for subscribing. Trade safe. And I'll let you guys know when I feel the bottom is in based on all the on-chain metrics. But this is a great location to watch, or like right here. Okay? See you guys.